Regional Banks ETF, KRE Stock, on fire. With the 10-year Treasury yield, the yield itself moving lower, there's an inverse relationship between price and yield. If yield goes lower, the price or the value of those bonds goes up. This is what's been crushing a lot of the regional banks. So if you are playing the regional banks ETF, KRE stock, it's been on fire and it's still got a lot of juice left in the tank. I've broken down a bunch of the stocks. I've looked at each of these stocks individually. I spent quite a lot of hours last night kind of breaking down, looking at all these. These stocks, their future earnings yields are in double digits. These stocks have been beaten up so much because of the loss of SVB last year or at the beginning of the year in March. Given that, there's still a lot of move upward in these regional bank stocks. Let's take a look at KRE, the ETF, and I'll show you what I'm looking at and break down some of the things that are happening with the regional bank stocks and KRE, the ETF. Let's jump in. If you're just finding my channel for the first time, thanks so much for stopping by. First and foremost, I'm an economist. I break down the economy to show how stocks would move through an economy that is either expanding or contracting. The next thing is I'll break down the stock market itself and the various sectors and individual stocks. We are looking at the regional banks ETF. This is KRE stock. KRE stock is got about 100 different stocks in there, and they're regional banks. And these tend to be commercial banks, your traditional kind of banks, but on a bigger region versus your bigger banks such as JP Morgan Chase, Citibank, and banks of those sizes, the more international banks. If this is the kind of content you're looking for, make sure to hit that like and follow button. Let's break down, as you can see, this is the 4-hour bar chart on KRE stock. Regional banks ETF has been on fire. The 10-year yields in general for Treasury are moving lower. There's an inverse relationship, and I'll kind of explain that in just a minute. But here is a look at the U.S. 10-year Treasury yield. Now, a lot of these banks, we lost SVB, Silicon Valley Bank, huge loss. The reason why, as interest rates went higher, yield higher, price goes lower. These banks hold on to these securities instead of maybe lending out money. So as yield goes higher, price goes lower, these banks are claiming these securities as their assets, but they're depreciating in value because the yield keeps going higher. Now, of course, everything is turning around and the Federal Reserve looks like they may be done for now at least. We'll still find out some more information as time goes by. But they're signaling that there's likely to be 3 rate cuts next year in 2024. We'll see how that plays out. But with yield moving lower, the price on the assets that these regional banks are holding are moving up in value. So whereas these banks had been setting aside cash, getting ready for potentially a catastrophe like another SVB, what's happening is now this will free up some of that cash and their assets are increasing in value. They didn't really have to do much. They just had to hold their breath until the Federal Reserve was done doing what they did. But the Federal Reserve did do a lot of damage rapidly. These banks couldn't sort of hedge against the situation. Again, we lost SVB. If you're going to get involved in regional banks ETF, you're going to know a little bit about banking in general. Here's some real quick bullet points. 3 types of banks. Commercial banks, your traditional commercial bank. This is, you go in, deposit money, the bank will loan out a portion of it. It's fractional banking. Investment banks, of course, your JP Morgans, Morgan Stanley, those would offer different kinds of services, but still, they could be universal banks. You get a lot of these bigger investment banks that were either purchased or have purchased other banks that were more traditional. Now they're universal, holding all those kinds of possibilities for what they can do. Assets and liabilities. These are important to understand. First, loans and securities. These are your assets. If you get, say, $1 billion deposited into your bank, fractional banking, you can lend out a portion of that, a percentage of that. Those loans would be assets, securities. You could take some of your deposits and buy securities, usually in the U.S. 10-year Treasury, and that becomes an asset itself. Liabilities, of course, interest-bearing deposits and non-interest-bearing deposits. If you have a savings account and you have to pay money on that, that's a liability. Moving forward, income. Real simple. Interest income, non-interest income. Any income you have coming in, if it is interest-bearing, that means you lend out $1 billion and you gain interest 6.5%. That is your interest income. Services may be non-interest income. Price and valuation. These are some bullet points that you'll probably want to kind of take a look at to kind of better understand things. But the one I'm going to be looking at is price to book value ratio. Price to book is really important. Most banks are cruising around 2.25 in a normal economy. And what this basically says is they look at the total assets or total equity and they ask the question, what is the bank valuation on the stock market versus its total equity? Price to book. And this is going to be really important. A lot of these price to book ratios we're looking at right now, less than 1. That basically means you could sell the whole bank and make a profit just by dumping all the assets because these banks have been beaten up so poorly. The regional banks ETF, KRE Stock, here are the top 7 holdings. These are all 3% or more. And by 3%, I mean like 3.1, 3.3, 3.4. A lot of the ETFs I look at, some of these ETFs will have 2 stocks that represent 45% of the entire ETF. In this particular case, all these stocks are roughly 2 to 3%. You get a couple smaller banks that really won't really have a big factor, but a couple things to look at. First, your symbol, of course, the name, the symbol, the price, current price. And then we've got 2024 earnings per share estimate, yield. Real simple. If you take what they're projected to earn in 2024 and you look at today's current price, the yield would be listed there of what you potentially could be earning by holding onto this stock. Some of these stocks are 7.5 to 12.5% yield. Keep in mind your benchmark treasury 10-year treasury just went below 4%. That's how beaten up these stocks are. And the thing is, because yield is moving lower, it makes these banks, these regional bank stocks, even more valuable. But the price to book ratio at the end there, you can see the valuation of each individual stock versus its total assets. Many of these are sub 1. Now again, there's about 100 different stocks in the regional banks ETF KRE stock. I'm just showing you the top 7 holdings. Normally they'd be at 2.25. So you see, by breaking out these numbers, you can see that the regional banks stocks themselves have been beaten up so bad. And these are much better prices. I showed you the 4-hour bar chart. Previously, you could have picked these up just a couple weeks ago for a real song. Finally, here's a look at the regional banks ETF 1-week chart. And as you can see, things got kind of ugly a couple weeks ago, all the way back into March when things sold off. When SVB sold off, or when Treasury yields pushed as much as they did, they pinched SVB. There was a run on the bank. It had to be rescued. It was insolvent. Take a look at the price chart here prior to that. This is the valuation that would probably be about correct for all these banks. the regional banks ETF. There's still a lot of juice in the tank. Many of these stocks could easily appreciate over the course of the next, say, 3, 6, 9 months by 50%. And that's being pretty conservative. Most of these, going back to price to book ratio, if they're trading at 1, hitting 2, 2.25 on a price to book ratio would be fairly in line with how banks would normally perform. If the Federal Reserve actually does continue to lower interest rates in 2024, this is going to boost assets for these banks. So as their assets move higher, because the value of their treasury holdings moves higher, because yield is moving lower, this is merely going to reiterate and cement the fact that these stocks are undervalued. Regional banks ETF is probably, in my book, at least 50% undervalued. And it's already just moved up about 30% in the past, 6, 7, 8 weeks. There's a lot still left in the tank there. I've been going through breaking down each individual stock, the regional banks themselves, looking at the bigger players within. There's still a lot of movement upward, and I expect we'll probably cross into 60, 65 range over the course of, say, the first 5 months of 2024. If this is the kind of analysis you're looking for, I break down the economy, I break down the individual sectors and individual stocks. Make sure to hit that like and follow button. I'll see you in the next video.